Oh,
What'd you do?
okay.
Wait.
Wait. Yeah.
Jama.
No. It is the replace.
Replace.
Yeah. You,
Okay.
did
Okay. Oh, you just
yeah.
Okay.
Yeah.
Okay.
And now. Right.
Okay. And it's okay.
Yeah.
Okay. Cool. Just Okay, and we are back to the funnest, best channel here for. We're going to be taking a look in at the markets. We're looking at the price charts. We're also going to be looking at some of the news today. So some of the news today we're going to be talking about. Apple's had one of the worst days. This is everything U.S. markets, U.S. headlines, and U.S. Publicly traded companies. We'll look at price charts. We'll look at fundamentals. We'll look at different chart patterns. But the first thing we'll talk about is Apple stock has worst day since April as iPhone maker faces FTC scrutiny, reports of Siri delay. So some of the highlights here: worst day, and the FTC sent a letter to Apple, and for example, they've got the update personal assistant series being delayed, and also Apple just wrapped up its worst day on the market since April after a report surfaced about delays with Siri, and the company's news app faced regular scrutiny. The stock dropped 5% on Thursday, wiping out its gain for the year and leaving it down almost 4% in 2026. The long-awaited artificial intelligence update to the iPhone maker's Siri personal assistant has been internally pushed back to May, potentially even later, Bloomberg reported. The update was expected to launch within a couple of weeks, but the company may roll the features out slowly over several months, the reporter stated. Let's see. Apple told CNBC it's still on track to launch in 2026. On Wednesday, Federal Trade Commission chair told Apple to review the terms and the policies of Apple News. It said that Apple News was promoting left-leaning news outlets while suppressing conservative content. Last month, Apple beat Wall Street expectations when it reported first quarter earnings. However, the stock has been dragged down in part by Wall Street's recent concerns that big tech companies are spending too much on AI. On Tuesday, UBS downgraded U.S. tech sector to neutral, citing software uncertainty. Yes. So let's take a look at Apple here. Let's see. Dun. Apple. Okay. Let's take a look at Apple. We'll also take a look at some of these charts, trends, and different things. Here we go. Okay. Yeah, let's take a look here. 1 minute. Okay, now let's take a look here at Apple. So, for example, here's some of the basic things that we will talk about right here. RSI right here, relative strength index. This is the what this shows is 70 equals overbought, and 70 and higher goes overbought. So 70 and higher equals overbought, and this can go much higher before it actually market corrects. And then right here, this is the let me type this here for you. This is This is 30, 30 and below equals oversold. So 30 and below equals oversold, and it can go way down before it ever. It can go way down before it ever market corrects. What do I mean? So for example, right here, sorry, yeah, right here you can see this goes all the way down to 16, 17, 18 before it ever market corrects and comes back up. So that's what I mean. Just because it's past 30, you can go a lot farther before it corrects. The same thing if you look at the RSI on the overbought. It can go much higher. Well, I can't see it here, but it can go much higher than 70 before it ever actually market corrects. But yeah, hold on. Why did here? So 70 and above equals overbought. You can keep that in mind right there. And yeah, so 30 and below is overbought. 70 and above is overbought. 30 and below is oversold. And you're looking right here, right there. Right here, it's at 46, 45. One thing I want to show you on this is that right here, 58 down to about 45. This area is called the this is very neutral, or it's the consolidation or continuation area, and that's generally between about between 55 down to about 45. Very neutral, very neutral. And I'll show you a place where I'll show you that in the price chart too. Now this is what we call the a MACD, and this is basically when it goes when the blue crosses the red going up equals upward price chart. Okay, now keep that in mind. And then when the blue crosses the red going down equals downward price chart right there. Okay, so that's that. Now let me show you this right here, right there. So that is the MACD crossing the red going up, and here is the price chart going up. But you see right here it's lagging. That's one of the bad things about the MACD, is that it does lag. And yeah, just like for example over here, the MACD crosses the chart going down right there, and you can see right here it's it's lagging quite a bit, right? So that's one of the complaints of the MACD. Let me show you this though, for a couple. Let me see if I can get you some chart patterns. Yeah, looking at some of the chart patterns right here. I'm using the 1 minute just so I can show you the patterns easier. But yeah, for example, right, let's see, give me one. Yeah. Oh, here's a good one. For example, here, this is a, if I can put this is a reverse head. Here's the right side, here's the left side, and then what you see right here is the neckline, and it just goes up a tiny bit right there. So let me type this for you. This is what we call a reverse head and shoulders with a neckline and very small breakout right there. Reverse head and shoulders with a very small breakout, and there's that. Yeah, let me just highlight that for you, easy enough. Right here, boom, and then here, let me show you this one. Right here. Here's another one I can give you really quickly and easily. Right there. Here's the head, here's the left, and here's the right. And then basically this is the neckline, and you have this big breakout right there. So, right there, boom. So this is what I would call the, this is what they call the head and shoulders, and this is the neckline, and then this one is a downward breakout. It's a downward breakout, right? So what am I showing you? There's the normal head and shoulders, and this is the reverse head and shoulders, and you have it's what you call, this is the upward breakout. That's the upward breakout right there. Okay, so reverse head and shoulders, and this is the normal head and shoulders. And then, for example, let me give you this one right here. You have right here, you see this. This is the head and shoulders, and then right here is the neckline, and it breaks out going down. So this is what we call the double top with a neckline, and then downward breakout right there. So double top, neckline, downward breakout. And the same thing right here, you'll see this. This is the basically triple top, and this is the neckline, and then you have the downward breakout. So let me type that one for you. This is basically triple top, neckline, downward breakout right there. Boom. Yeah. So there's that. What else can I give you here? Those are some quick ones that I can show you. Let me highlight those for you. That might be easier. If I highlight those for you, you can see them better. Right there. And go over here. Yeah, right here. Boom. Yeah. Also here's another one. You have basically right here. Here's the bottom. Here's the bottom. So you have basically another double bottom right there, and just a tiny. Let me point to this. This is the neckline breakout. It goes up right there. Yeah. So bearing that in mind. Let's see. Yeah. So those are just a couple of chart patterns I can show you real quick, and that's looking at Apple because Apple's in the news right now. And let's go on. So right now you can see right now the price is sitting right there at about 261. Yeah, 261, and the RSI is very, very neutral at 54. So let's look at some of the fundamentals. Volume wise, 81.08 million. Market cap is at 3.8 trillion. Let's go to the fundamentals. Earnings for the last 3 quarters. Q1, as you see, did well. Q4, Q1 of 2026 did well already. Q4 and Q3 of 2025 also surpassed earnings expectations. So the quarterly, that's looking good. But really what you want to do is you want to look at annually. Annually, 2025, 2024, and 2023. All 3 years surpassed earnings expectations. So that's a very good fundamental. But why is it good? Because it tells you the strength. It tells you how much the company is earning, if it is earning anything, and what it's earning in comparison to what it was supposed to earn. So you have the projections, the expectations, the estimates, and then if it beats the estimate, that means it's doing even better than it's supposed to, which is obviously a good sign. Yes. Statements wise, let's look at statements. That's also a fundamental thing that you should look at when you're trying to learn about the health and strength of the company. What's it doing annually for revenue, profit, stuff like that? Well, let's look here. Let's look at the last 3 years. Let's look at the last 2 years, 2024 and 2025. Revenue, profit, and income. The last 2 years were very good. It was all in the green, but the 2023 revenue, profit, and income was all in the red. So bear that in mind. Now, if you want to look at net income during 2025 was good, all in the green. 2023 and 2024 was in the red. So as far as net income, only 2025 was good, but as far as revenue, profit, and operating income, 2024 and 2025 were good. So yeah, and let's look here. That's statements. If you want it for entertainment purposes, you can look at forecast wise. 39 analysts 1 year price forecast have a max estimate of 350 and a minimum estimate of 205. So the again, that's mainly just for entertainment, because who are these analysts and why? I don't always put too much stock into that. Yes, so keep that in mind. Let's go here to the next one. So that's Apple. Let's go here to, for example, this one's talking about tech IPO hype gets drowned out on Wall Street by prospect of $1 trillion in debt sales. So some of the highlights of this article: SpaceX is boosting enthusiasm on Wall Street, but all the current action in tech capital markets is on the debt side. The tech and AI related debt issuance across the globe more than doubled to 710 billion last year, and could soar to 990 billion in 2026. Yes. The chatter around a boom in tech IPOs, meanwhile, has yet to result in any notable listings this year. So, while we're thinking about the SpaceX initial public offering and hopeful listings from OpenAI and Anthropic have juiced up IPO excitement on Wall Street, the current action in tech capital markets has nothing to do with equity. Rather, it's all about debt. And the techs for hyperscalers, Alphabet, Amazon, Meta, Microsoft, are collectively projected to shell out almost 700 billion this year on capital expenditures and finance leases to fuel their artificial intelligence build-outs, responding to what they call historic levels of demand for computing. And in a report late last month, AI-related debt issuance across the globe more than doubled to 710 billion last year. That number could soar to 990 billion in 2026, and Morgan Stanley foresees a 1.5 trillion dollar financing gap for the AI build-out that will likely be filled in large part by credit, as companies can no longer self-fund their capital expenditures. Yeah. They can no longer self-fund their own capital self-expenditures. The biggest corporate debt sales this year came from Oracle and Alphabet. Oracle said in early February it planned to raise 45 billion to 50 billion this year to build additional AI capacity. It quickly sold 25 billion of dollars worth of debt in the high grade market. Alphabet followed this week, upping the size of a bond offering to over 30 billion after holding a prior $25 billion debt sale in November. Amazon filed a mixed shelf registration last week, disclosing that it may seek to raise a combination of debt and equity. Meta's earnings call, the CFO said the company will look for opportunities to supplement its cash flow with prudent amounts of cost-efficient external financing. Prudent, which may lead us to eventually maintain a positive net debt balance. Again, these are very interesting and creative words, so take them with a grain of salt. And as Tesla bolsters its infrastructure, the electric vehicle maker may look to outside funding, whether it's through more debt or other means. Yeah. So keeping all that in mind, again, we still have reports that Elon Musk will do with SpaceX after he merged the rocket maker with AI startup XAI, and now they're forming a company that he says is worth 1 trillion. Yes, yeah. Um, Reports have suggested SpaceX will aim to go public in mid 2026, while investor Ross Gerber doesn't think that Musk will actually uh, take SpaceX public as a standalone entity. Yeah, Goldman Sachs analyst said in a recent note that they expect 120 IPOs this year, raising 160 billion, up from last year. Let's see. Yeah. So listen to that. I'll repeat that. Goldman Sachs analyst said in a recent note they expect 120 IPOs this year, raising 160 billion, up from 61 deals last year. That's almost double. Um, yeah. So let's take a look at this. Yeah, there were 31 tech IPOs in the U.S. last year, more than 3 years prior combined. So let me repeat that. There were 31 tech IPOs in the U.S. last year, and that's more than 3 years prior combined, though far below the 121 deals completed in 2021, according to data compiled by the University of Florida. That's worth repeating. Um, there were 31 tech IPOs in the U.S. last year that were, and that's more than the 3 years prior combined, and that's still far below the 121 deals completed in 2021. Wow, that's a lot. Okay, so let's take a look at some of these companies here. All right, we've got Amazon, Meta, Microsoft. Yeah, let's take a look at some of these. Amazon right here. Bum, bum, bum. All right, let's take a look here at Amazon. Again, remember, we just talked about how this is the overbought, this is the oversold, and right now this thing is sitting here at about 72, right there. So it is already technically overbought, and you see this right here. Remember, the RSI is basically looking at the history, the previous history, and predicting the future. So keep that in mind. Um, and right here you can see, if you want to have a couple things about the MACD, right here the MACD does cross the signal line going up, just like the price chart right there. So here the MACD isn't lagging as much, and let's see right here, you see the MACD crossing the signal line right there, bum bum bum, and it is a little bit lagging here, right there. Yeah, a little bit lagging. Yeah, and for example, so you right now, because this is at 72, you're thinking it's overbought, but again, these things can go way overbought and way oversold before they actually market correct. Look at this one. This one all the way down to right there 20 before it 20 before it ever actually market corrected and went up. So bear that in mind. And then look at this right here. We have a 1, a 2, and a 3. This is basically a triple bottom. So let me type that for you. Basically, triple bottom, and it does break the neckline and upward trend. So it does. So for example, here you can see here's the neckline right there, and it does break out, and it does reverse the trend. Yeah, let me highlight that for you right there. Bum, bum, bum. And for example, let me give you some more chart patterns if I can here. Yeah, here's yeah. Oh, here's one. Here's basically what we call the right here. Here's the reverse head, left side. Let me pull this out a little bit here. Yeah, and you see, so here, and you have the right there, And so this is basically the yeah, let's go to 1 hour, 1 day. Yeah, here we go. 1 minute, let's go to 1 day. Let's go back to 1 minute, maybe that's easier. Okay, yeah, so for example, here we go. And then here is, yeah. Oh, here's one you can easily see. Right here, bum, bum, bum. This is the double bottom here, and basically this is the neckline right there. So right here, yeah, bottom, this is the neckline. Here you have another, this is what we call the double bottom neckline, and the upward breakout right there. Bum, bum, bum. And then also, if I can show you another one or two. Oh, that's enough. That's enough for now. You get the idea. So yeah, there's some chart patterns for you. Yeah, if you're looking for, oh, here's one. I can show you this. This is basically what you see right here is the double bottom, and this is the double bottom, and basically a very little breakout right there. Double bottom with very little breakout. Let me show you that right here. Yeah, right there. Boom. And then yeah. And yeah. So that's that. Just a couple of things right there. Now let's take a look at some of the fundamentals of Amazon. Amazon stock has dropped over 20% from recent highs, entering bear market territory due to high AI spending and lower than expected growth in cloud computing. So bear that in mind. Yeah, volume-wise, 83.9 million. Market cap is 2.1 trillion. And then right here, quarterly, Q4 of 2025 just missed the expectations. Q3 actually beat expectations, and Q2 also beat expectations. So the last 3 quarters of 2025, Q2 and Q3 beat expectations, Q4 missed it. So annually, 2025 beat expectations overall. That's what I mean. That's why sometimes I look at quarterly. Again, people ask why I look at the earnings, why I look at the statements, because earnings can help you tell the health and longevity, the strength of the company, because that tells you if they have money coming in. And yeah, quarters are important, but sometimes people might say annual is even more important because you're looking more at the long term usually. And that's why even here, even though you missed 1 quarter's expectations, annually overall, the 2025 beat the expectations. Same thing with 2024, same thing with 2023, etc., etc. So yeah, all 3 years overall beat earnings expectations. Now, what does that really mean? Well, again, you have certain expectations that Wall Street says, based on, all these numbers and data, this company should be able to do this next year. So that's the expectations, or that's what you might call the estimates. Now, if the company beats the estimates or beats the expectations, that means in Wall Street's eyes that it's doing good, right? So that's just something to keep in mind. Let's go to the statements. Statements wise, you want to click the annual button. And again, what does this tell you? Well, it tells you about the total revenue, gross profit, operating income, and in this case, look at the last 3 years. So all three of those sectors are green and looking good. I might add that also the net income for the last 3 years was green and looking good. So statements wise, earnings wise, Amazon looks like a strong company, right? And for entertainment purposes, if you want, you can simply go over here to forecast. The all-knowing experts on Wall Street. Again, that's why I say it's just kind of for fun entertainment. But 63 analysts offering a one-year price forecast have a maximum estimate of 360 and a minimum estimate of 175. You have to give it a strong rating. Again, we're looking at this because in this article they talked about Amazon. We can also take a look here at the techs for hyperscalers Alphabet, Amazon, Meta, and Microsoft are collectively projected to shell out close to 700 billion this year on capital expenditures. Yeah, so that's why we're looking at them. So why not take a look here at Meta as well. Go right here. Meta. Here we go, Meta. All right, so Meta. Yeah, Meta's shares fell 13% in 6 months due to AI spending worries, while Pershing Square notes AI could enhance content recommendations and ad revenue. Okay, that's Meta. All right, right here, let's take a look at, we talked about the RSI, because the RSI, remember when it's between 47 or 55 and 45, it's very neutral. This happens to be at 46, so it's very, very neutral. I'll even type that for you. This is this is the neutral area right there. And then also, yeah, let me show you this. I might as well show you this pattern right here. If I could highlight this right here. See how right here there seems to be an invisible ceiling right here, and visible floor right here. That's what we call, this is what we call the consolidation or continuation area. And if you look down here in the RSI, it does also kind of match up with that. Right here, not completely, not totally, but a little bit. That's why you see the RSI is generally staying very neutral. Right here, yeah. And let me show you what else I can show you. Oh, here's another good one. If you look right here, this is the reverse head, this is the right side, this is the left side, and right here is kind of a diagonal neckline. You see it break out just a little bit, so let me type that for you. This is the reverse head and shoulders. This is a diagonal neckline with a small breakout right there. Yeah, small breakout, and right here, boom. Yes, so there's that. And then yeah, let me show you this over here. Yeah, here's another pattern I can show you very quickly, very easily. Right here, boom, you have the double bottom right here, and there's not, let me for example, here is the neckline on the double bottom. As you can see, it's a little bit diagonal, and then just a tiny little breakout right there, not much. So let me give you that. So here you have a double bottom with a neckline and a small breakout right there. Bum, bum, bum. And over here, yeah. So those are some of the ideas for you right there. Some chart patterns and things you can look at. Let's see. Right here, try this one. right here. Here's your left side. Here's your right side. Here's your reverse head. Again, here's your, let's call this, let me highlight this for you so you can see it better. I'll draw you the neckline right there. It's a little bit diagonal too. And so this is called, we call this the reverse head and shoulders with neckline and the breakout right there. So reverse head and shoulders with the neckline and breakout right there, and right there, boom, and then yeah, it goes up just like that. Yeah, so that's some of that. Yeah, let's go back here. Those are just some of the technical analysis to show you some of the chart patterns, etc. Boom, 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 and yeah. So you might be asking, what can we expect here? Dun, dun, dun. Changes to 1 hour. Getting changes to. Yeah, that's some of the. Oh my God. If you want to change the time, 1 day, 1 hour, or you can change it back to 1 minute. But anyway, there's that. And so here you have got yeah, more trading here. As it comes down, you see this. See how the volume of trading increases right here. Bum, bum, bum. The volume of trading increases. And then also, if you look over here, in this area, right, let me put the arrows on this. In this area right here, see the volume down here is lower, and then there becomes a, for example here, as the price chart moves, the volume increases, right? And the same thing here, the price chart moves, the volume increases right here. The same thing, you'll find the same pattern other places too. When the price chart moves, the volume will also increase as well. Now that's Meta. That's enough about Meta for now, probably. Let's go on over here. Dun, dun, dun. Also, I wanted to point out to you that right now the RSI just dropped. So right here, the RSI is now at about 14. So yeah, you can see for Meta, their price chart is dropping. RSI is all the way down at 14 and hasn't market corrected yet. That's what I mean. These things can go very positive or very negative before they ever market correct. Volume wise right now, if you're looking at the earnings, it's at 324,000. Market cap is at 162 trillion. And earnings wise, if you look at quarterly, remember we can look at quarterly and yearly on earnings, but generally you want to look at annually. Quarterly, Q4 of 2025 surpassed expectations. Q3 really did not hit the expectations at all. It was much far below. But Q2 also surpassed it. So that's what I mean. You can have quarters that don't meet the expectations, but overall, yeah, 2025 beat expectations overall. 2024 did the same thing. 2023 also beat expectations. So again, the earnings are looking good annually for Meta. Statements wise, you want to hit that annual button, because statements wise you really just want to look at annually. For the last 3 years, for total revenue, gross profit, and income, the last 3 years, all green, all looking good. And net income was great for 2023 and 2024, but 2025 net income was in the negative, so bear that in mind. Yeah. So yeah, that's Meta. Some of the fundamentals on Meta, and also right here, forecast wise. If you want to look at it just for fun, again, don't put too much stock into it, but 60 analysts, 1 year price forecast, max estimate of 1,144, minimum estimate of 700, yes, And so where are we at right now? We are sitting here at 636. That being said, that's also why are we looking at this? Because Meta was also named as one of the techs for hyperscalers, collectively projected to shell out close to 700 billion. That's billion with a B, on capital expenditures. So that's quite interesting. Let's look at another article. Let's see. This one is talking about electricity prices rising by double the rate of inflation. Data center demand means no relief ahead, analysts say. Electricity, some of the highlights: electricity prices jumped 6.9%, and prices will continue to rise as data centers make up 40% of electricity demand growth. Um, yeah, so let's take a look at this. And here's a map. U.S. states with the most data centers. Illinois has 244. Ohio has 193. Virginia, 666. California, 321. Texas, 410. Why electricity bills are on the rise nationwide. Yeah, so let's look into this. Families won't see relief from rising electricity prices anytime soon. Artificial AI data centers soars while power supply grows slowly, according to Goldman Sachs. Electricity prices jumped 6.9% in 2025, more than double the headline inflation rate of 2.9%. Goldman analysts told clients prices will continue to rise through the end of the decade as data centers make 40% of electricity demand growth. The analyst said this will lower disposable income, drag down consumer spending, and slightly slow economic growth in the coming years. Again, prices will. I'll repeat that. Prices will continue to rise through the end of the decade as data centers make up 40% of the electricity demand growth. Households will see electricity prices rise an additional 6% through 2027, the analyst said. Price inflation will then slow to 3% in 2028 on lower natural gas prices, they said. Consumer spending growth will fall 0.2% through 2027. Trajectory of electricity prices, however, will vary widely across the U.S. based on different regional markets. Yeah, the income and spending drags will likely be larger for lower income households because electricity accounts for a greater share of their spending. Yes. Higher electricity prices will increase core inflation by 0.1%. And the rapid growth of data centers is colliding with constrained electricity supply as regulatory barriers as well as labor and material shortages make it difficult to build new power plants, the analyst said. Where can we get some... Mr. T has embraced the AI industry as an engine of economic growth, but he increasingly sees electricity prices as a threat to the Republicans' party political fortunes. Yes, Trump has secured a promise from Microsoft in January that it will not allow data centers to drive up prices. The White House also signed a pact with several states last month that calls for tech companies. I didn't mean to do that. Sorry. It calls for tech companies to pay for the new power plants in the nation's largest electric grid, PJM interconnection. Yeah, data centers are playing a particularly disruptive role in the PJM market, which covers 13 states, primarily across the Mid-Atlantic and the Midwest. The cost to secure power supplies in PJM has exploded in recent years, with $23 billion attributable to data centers. Yes. So let's take a look here at some of the electricity prices. Let's go here to energy. I thought we'd take a look at some of the energy stocks. So let me look here. I'll show you this. Top electric companies in the USA. Boom. In the US, yes. So, yes, some of the electric companies we can look up. Next era is one of them. They also talked about consolidation, Edison, Constellation Energy is a big one. Let's take a look at that one. Constellation Energy Corporation, bang, right here. Constellation Energy must sell 3 power plants to finalize $16.4 billion acquisition of Calpine Corporation as mandated by the U.S. Department of Justice's Antitrust Division. Now, remember, let's look at some of the analytics here. Bum, bum, bum. RSI is sitting here at a 39. Remember, this is the overbought line. This is the oversold line, and then remember, this is kind of like let me draw this for you. This in here, this is kind of the neutral area, right? So just to remind you about that, as we look up here, Constellation Energy. Yeah. So again, Constellation Energy right here is sitting at about 274, right there. And let's see. Oh, a couple little price charts I can show you. Here's the neckline right there. Here's the double bottom, and then right here, that's the double bottom, and there's just yeah. Huh? It's okay? Yeah. Okay. And here's the right there. Okay. Ladies and gentlemen, thank you for all your attention, all your comments. It's been great talking with you.